It's about that time of day again. Already back here once again. My name is Joseph. Monday evening, April the 2nd. Welcome back to your nightly newsletter. My plan this evening is to identify the most reliable trading opportunities setting up for tomorrow's trading session. And I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening with crude oil, oil is bearish with a big old spike in channel pattern. But honestly, it's the grind break that we see on the chart that really tells me where to start looking for the most reliable selling opportunities tomorrow morning. The S&P is bullish. Yes, I said bullish, and running back into the range from last week. And I have a 4-step process to help you guys find the best reversal opportunities for tomorrow's session. Yeah, the Nasdaq is still bearish though, right? Big scary move down on all the equity markets. Nasdaq is bearish tonight, but we're trading at the low of last week's range. So I'm looking for the momentum to swing back into the range, going higher tomorrow morning. That's right, we may be bearish on the NQ right now, but looking for a move back up into that range tomorrow. How about some gold? The yellow metal is bullish with a big measured move, and that tells me to look for buying opportunities using a two-legged pullback down in the battle zone tomorrow morning. The euro is sideways tonight with a big megaphone pattern, that bow tie pattern or that expanding triangle pattern. I'll call it the megaphone. The euro telling me to fade the breakouts using failure patterns and that 2-try rule on Tuesday morning. Well, here we are once again. Hope you guys had a great Easter, Passover, April Fool's Day holiday this weekend. We had a day off on Friday, so we're back here, hopefully rested and refocused. We get a new week, a new month, and another great set of learning and earning opportunities here on tonight's newsletter, and of course, right in the markets here for tomorrow. I got a great video for you guys tonight with plenty of reliable trading opportunities setting up for Tuesday's session. But before we get into those charts, I need to remind you, if you're watching this video right now on our YouTube channel, you can find a detailed description of this entire strategy written out on my blog here at sidewaysmarkets.com. I'll put the link in the description of that YouTube video for you. Also, if you have any questions about anything covered in this video, please remember to post them in the comments section below the YouTube video. And if you really like what you see, please help support this channel by subscribing. And while you do that, make sure you do it twice. Hit that bell icon so you get notified every time I post another video. And if you really want to make sure you stay in tune with everything we do here at School of Trade, head over here to the blog at Sideways Markets and make sure you join our mailing list. I'll put the link in the description of that YouTube video. Come over here to Sideways Markets, join that mailing list, and I'll send you an email anytime I publish something new here at School of Trade. And also, did you know I'm always posting exclusive content? That's right, you can't see it anywhere else on the interwebs by following me on my social media channels, StockTwits, Twitter, Facebook, LinkedIn, whatever favorite flavor of choice, whatever you like to use on social, right? Follow me there for charts, links, and updates throughout the week. And speaking of charts, how easy is this? That's right. All the charts from tonight's video, right where it says click here to download today's charts. That's right, that link will take you to a page where you can download all the charts from tonight's video and from ready on your computer for tomorrow's session. And then speaking of tomorrow's session, how great is this? Upper right-hand corner, I've got a free pass for you in the upper right-hand corner. If you're not a member here at School of Trade, grab that free pass, upper right-hand corner, and come join me tomorrow as a guest in the trade room. I'll teach you the strategy. I'll show you all the patterns, all the rules, and even give you a chance, right, to ask some live Q&A as well. So grab that free pass in the upper right-hand corner, and I'll see you tomorrow as a guest in the trade room. Capiche? Let's jump right in. Tomorrow's Tuesday. We got a lot to work on here. We've got a busy day here today, and we got another busy day tomorrow. But there's no major news on the calendar here for tomorrow. Let's take a look at this as we go into the month of April. So we made it to the first day of the month. Well, I think most of us did. The equity markets may disagree with us in this. But I got some good news for the equity traders tomorrow. So we may come right back up where we came from. More on that in a moment. Tomorrow is Tuesday, April 3rd. You can see there ain't nada on this schedule for tomorrow. There's nothing going on tomorrow, and that means, of course, We'll be watching the opening bells, 8:20 a.m. on gold and currencies, 9 o'clock on oil, 9:30, of course, is the opening bell on the E-minis, 10 o'clock being the 10 o'clock shock, and 11 o'clock, right, is that transition into lunch. Those will be our milestones in the trade room tomorrow morning. Looking forward here for the rest of the week, we got big news on Wednesday. They don't have this, at least not published in this website yet, but I was told the FOMC minutes are going to be sent out on Wednesday afternoon. So definitely some big news on Wednesday. Not that big of a deal on Thursday. Get international trade and jobless claims on Thursday morning. But really Friday is where all the meat and potatoes are hanging out this week. We got the employment number, the non-farm payroll number on Friday morning. And then it's tough to tell how much it's tough to tell how much people are actually care about this. But of course, our Fed chairman, Jerome Powell, is speaking in Chicago. This isn't really a testimony, so to speak, but with all the stuff back and forth out there in this world right now, we may see that really become an actionable event, a tradable event, late in the day on Friday. So we'll know more about that as we go into the latter part of this week. Again, nothing to worry about for tomorrow, though. No major news tomorrow. Wednesday inventories, international trade on Thursday, and jobs right on Friday morning. We'll touch base on that more as we go into the middle to late half of the week here. In the meantime, let's discuss some charts, shall we? Let's jump right in. Tonight I'm going to go crude oil, S&P, Nasdaq, gold, and of course, we can't forget about, right, the mighty euro. Starting off tonight on crude oil, crude is bearish with a collapse lower in today's session without a single pullback to the moving average and a clear grind break, where that little yellow arrow is, right, from today's bear channel. First, this strong move lower was such a collapse, such a clobbering from last Friday's move higher that price never gave sellers a chance to really load into a decent position, which usually happens up above the moving average. So when we do pull back tomorrow, I would expect a lot of sellers have been patiently waiting, and anything that goes higher here above that moving average, I would expect is going to be seen as a selling opportunity. The second big point I want to make tonight is the bear channel. If I can get my drawing skills on here, this bear channel, right, that bear channel, it broke free of the channel right there, okay? So that channel broke without any significant pullback, which once again tells me that sellers are waiting for that pullback. Sellers are waiting for it to go up and then back down again, and we got nothing. Right, so the sellers really haven't been given much opportunity here to sell high, at least so far this week. So the bears, they clearly have control right now. This is definitely not a bull market, that is for sure. But the one thing that all the clues tell us is that sellers are likely waiting patiently up above that moving average, and that's where I'm looking for the best selling opportunities for tomorrow. It looks like right now, it's basically just a spike in channel here, right? Strong move down, new lower low, right, spike in channel. Now, I got to be honest, this thing could keep going lower, right? It could keep going lower, and this spike in channel may be pointed a little bit further south, right? So just be aware of that as we go into the opening bell in Asia, into London tomorrow. Right now, this is just simply all the information I have right now, but I will be updating my chart, right, as we get more information overnight. This looks like a spike in channel now, doesn't it, right? So what do we know about spike in channels? We know to look up at those prior swings and get that market up and sell it back down. That's the basic principle of a spike in channel. A spike in channel basically tells us that we have obviously sellers in control, but it's gone so far, right, that we have to start thinking about this market being a little bit too low, right, to start selling, right? You want to sell back here, right? By this point now, right, we've had a whole day of straight down here. At some point, bears are going to start taking profit. At some point, even though I don't agree with this strategy, buyers are going to start trying to pick some bottoms here. Again, I don't agree with that strategy, but we have to assume there are going to be some traders, right, who haven't learned that lesson yet, and they're going to try to pick the bottom here. So knowing that, I'm expecting to see a bit of a short covering rally, and I'd like to get us, again, up above some of these prior swings. If you're a client of mine, you know this is what we call a grind break, right? G-R-I-N-D, right? Break, right? Grind break. And really this kind of comes from watching a market over, I've seen this happen so many times, watching a channel break free, but then grind kind of down the top, right, of that channel. And what usually happens is we usually end up going right back to that first level there, right, and getting that to be the sell after that situation happens. At least in my experience, that's what happens a lot. So this level here at 63.41, right, is a big deal for those sellers. So what if price goes up? What if price goes down? What if price goes sideways? How do we trade this sucker going into tomorrow's session? Well, my plan for tomorrow is if price goes higher here, I'm really looking for a move back to the moving average. I expect to see buyers try to reverse that trend, and I expect them to fail. If they fail, I can sell into their failure, right? Or I can wait for a strong move down and then sell that pullback, going back down to retest that low, right? So failure, strength, and then pullback. The pullback being a little more reliable than the failure pattern, right? Because it shows proof that the buyers have failed. So that's my strategy if price goes up, right? Price goes up, get above that moving average, come crashing back down. It'll probably look something like this, right? Where it goes up, pullback, fails, strength, and then of course that pullback back down again. So that's the plan if price goes higher. You know, we may also see it go a little bit stronger here, you know, so don't be afraid to call this a two-legged pullback and then the failure, then the pullback back down. So, you know, if we do see a trend line form there, use that trend line as resistance, and then of course failure and strength from there. So, you know, again, I want to get up above that moving average and sell it back down again. What if the price keeps going lower? What if we keep going lower here? If we keep going lower again, you know, let's just say, for example, get rid of this channel for a moment. Let's just say, for example, we open up after 6 o'clock Eastern time and the price goes even lower here. Now I have even steeper of a channel here. And again, at that point, I'm going to be looking at selling opportunities here up above the high of that channel with the real goal, right, of getting it up, way up, right, and then failure back down tomorrow. So again, just trying to avoid selling low right now. I'm trying to look at selling right up at those highs tomorrow. And then, you know, last but not least, I at first glance, this looks like a trading range, right? Little range bound market right there, strong move down, you know, but then of course we see this lower low here. If we come out at 6 o'clock and we see this thing jump right back into that range now, right? If we come in tomorrow morning and we're seeing this, you know, kind of back and forth here. The bottom line is if we start seeing double bottoms here at these lows, then we treat this as a range. And anytime we see a range, we always focus on failures and the 2-try rule. So I want to sell up above this or buy down below this. The sell up above this is going to be the 1-try, 2-try, failure back down. The sell below it will be get the moving average below and then 2-legged pullback for a sell from there. So 2-try rule, or what I call that fake out breakout pullback pattern right below that range low tomorrow. So if we do see it go range bound, how will you know if it goes range bound? If you start seeing double bottoms right on those lows. You don't necessarily need a double top, just a double bottom. That double bottom will tell you we're not going lower for lower lows anymore, and we're looking right to be right where we're going sideways. If that's the case, again, you want to sell up above the top of that range. The tricky one is getting short after a strong move lower. That's the key. Strong move through that low. That should bring that moving average down below it, right? And then we can look to sell going down from there. So relatively easy strategy there on oil. It really all depends on, do we bounce higher here right now and create a range? Do we bounce and get above that moving average for a failure? It really all depends on what happens here in the short term. But rest assured though, right, we know that sellers are probably trying to get back down to that prior month open. This of course will be the month of March's open at 61.78. We do assume that is a big milestone. It's difficult for us to really get a measured move here. You know, I think really the only thing we have right now is it's about a quadruple down, you know, 1, 2, 3, 4 legs down, 1, 2, 3, 4. That's really the only thing we can see on this chart right now that really gives us any form of reference. So last but not least, how do we turn bullish? What does a bull market look like here? Well, 3 things we need, right, for a bull market. A strong move up, a pullback to the moving average, right, and then, of course, a strong move through. I don't care what direction I trade in, but right now I have a bear market and I have to treat it as a bear market. Okay, what I want to see first is I want to see a strong move higher. That strong move higher will likely attract sellers, and those sellers will likely try to sell the sucker back down into that range. From there, we want to see a pullback to the moving average. That's where buyers can show us they want this. And likely what will happen is the sellers, for the market to turn bullish, the sellers will basically have to get out of the way, right? And they'll have to get out of the way on strength, right? So once we see that strong move higher here, then draw that channel to high, bring it down to that low, and now we got a good spot there to look for that buying opportunity coming off of that low. I call that a hidden channel, and that's my plan tomorrow if the buyers can take control. Buyers want to get up to that 65.42. Sellers want to go up and then back down again, right? If they keep going, though, I got my eye on that 61.78 area, right around that prior month open, because that's pretty much the only information we have to work with here, as this market literally collapsed off that high from last Friday. Now, speaking of a collapse, how about that Emini? Holy Christmas! S&P is bullish. Are we sure about this? I think I'm pretty confident we're bullish at this point after the sellers tried and failed twice to make new lows this afternoon. And even with this scary move lower, it is a scary move lower. It's difficult to look at this market and say we're a bull market right now, but it's easy to see that this was nothing more than the range rotation and the pendulum swing strategy that we talked about last week on the newsletter, right? I know it was a while ago, but remember last Wednesday night we had that Thursday session and we're inside that trading range? Yeah, this is the same trading range we talked about last week on our newsletter. Now, I'm not gonna, obviously, if unless you were living under a rock today, right, it's easy to see the market certainly has momentum moving lower. So the first step is to make sure the sellers lose that momentum. And to do that, I like to look for what I call the two-try rule, right, which they did. Bears tried once, bears tried twice, and they could not retest the low. Okay, that's a big deal. The bears tried once at the moving average. The bears tried again above the moving average, and they were unable to retest the low. Now, this is not just unable. This is really bad because they have actually higher lows. What do higher lows give you? They give you a trend line. What is that trend line going to do now? That trend line is going to keep those bears from getting too aggressive here, because now they know they've got support in their way. Now there's something in their way from reaching their goal, which of course is to go back down and retest that. We'll call that 25.52, right? Rounded up there, right to that round number. Okay, so now we can definitely see the bears, their momentum has dried up. But now we need the buyers, right, to get some momentum in their direction. Okay, now we're going to see the next step is to see some strength, right, going higher. Well, looky here. Here we have a strong move higher here, right? Likely coming from sellers getting out of positions, right? I doubt these are buyers, right, buying this market yet, right? I know it's range bound, but that's a hell of a move down. And so you're a little bit foolish there, right, to be trying to buy it right at that point. But now we've got two clues. The momentum has shifted now. Again, the bears tried twice to go lower. Now the bulls have come in with their own momentum. Now, the third step is now we can mark up the new highs. Mark up those new highs. Yeah, them little guys right there, right? Mark up those new highs and bring it down to that low, right? And that creates a hidden channel, right? So now we know that buyers should be reacting, right, to that hidden channel. Are they? What do you think? These ain't some sellers. These are not sellers buying off this. Yeah, that big green candle, right? Those are buyers now coming in and voicing their opinion of value. And it's pretty obvious at this point now that we have a shift in momentum from the sellers now to the buyers. The sellers are boxed in right now. They get that rising support trend line. We get a beautiful hidden channel, and buyers now are jumping on the bandwagon, likely going to send this price right back up into that range we came from tomorrow. The one thing you've got to be aware of right now is you don't want to buy too high. Because remember, sellers are going to try to sell more up above that next swing at 88.5. So don't go getting too greedy on this right now. Wait to buy at support. Your most important rule when it comes to a reversal is buying at support. What I mean by that is if you look left back here, you'll notice this 88.5 area. this wouldn't be a bad spot here for a little trap high, failure, back down again. So you're probably going to see some bears try at least once more to stall this move going higher, because after all, and you can see a great example of a grind break right there. Do you see that little grind break? We talked about this earlier on the crude. See how it breaks free and kind of grinds down that top here? Look what happens, right? It comes right back, hits it, and blammo, right back down again. That is exactly the grind break scenario that I was just referring to, right, on oil. Okay, so trend is, again, momentum has shifted. Buyers here are now showing their voice and their opinion. And here we are now at the low of that range, right? This was last Wednesday's session. We saw one try, two try. It looked like the end of the week was nothing but bullish until, surprise, surprise, that pendulum swings all the way back down. If you watch last night's newsletter, and I'll put a little link in there so you guys can watch the newsletter from last week when we discussed about this, right? But if you watch last night's newsletter, right, last Wednesday night, right, you know that the amount of the pendulum swings up is oftentimes the amount of the pendulum swing down. And look where we find, right, some support down here coming off of that low. Now, we're not out of the woods yet. We're not out of the woods yet. We definitely have a strong move higher. We got the pullback. Now I want to see us break higher here. If I can see us break higher here, now we have strength, pullback, strength. I can find my new channel. I can find my new levels of support, and I can look for buying opportunities now, right, on the pullback back to that support. Again, be very careful trying to buy the break higher right now, because if I was a seller, and I'm definitely not at this point in the game, if I was a seller, I'd be looking to sell above that 88.5. That's exactly where I'd be looking, right, to be a bear. And that's where you want to stay away from being a buyer right now, because that puts you too far up off of that moving average. Another option here would be to use this rising support trend line to our advantage. So let's just say, for example here, right, we see it go up and then come crashing back down again, because again, sellers are trying to sell high here. At that point now, my plan is simple. Let those sellers try twice and fail. The bears at this point will have a brand new lease on life, right? If this thing collapses back down again, right down to that trend line, the bears are going to start thinking, oh, yes, we're going back down to that low, and they might be successful. Let's be honest. Right? That big of a move down, this could just come crashing right back down again. But what I'm looking for at that point is I can't sell this, right? I can't sell that. It's way too dangerous. What I'm looking for is the two-try rule. One try, two try, blammo. That'll be another option here now for us, right, to jump off of that low. What I call my number 3 pattern in my trade room, right? Our number 3 pattern. That two-try failure. So a very good example there. If we don't get the move really cranking higher here, we can look for that failure from there. All right, Joe. So you're a bull on this. What about the bear side, buddy? What about the bear side, right? You can't forget about the sell side, because look at this move lower. Again, I get this rising support trend line. So I basically have two options. When it comes to a rising support trend line, it's pretty simple. Just don't sell into support. So what do I want to do? I want to sell at resistance. Option number 1 would be get up and trap high above those highs. That's a pretty daring attempt though. Because of that range, this is not your average move lower. This is a pendulum swing, which means that a move higher here could easily run right back into support and then see ya right back up into that range. So I'm a little bit hesitant to try to sell that high here, right, for tomorrow. What I'd rather do is show me some proof. Prove to me that you can get below that level, and then we can look for selling opportunities going down from there, using that level of support as a key level of resistance, right? As a key level of resistance. So pretty simple idea for the sellers. Be careful. Be careful for tomorrow trying to be a bear right now, because you don't want to be chasing after this move and not see what's staring us in the face, right? And that is that big range that we finished up the month of March and or last week's session, right, using. Now, great example here on the S&P, right? We got the 1 try, the 2 try, and some strength. Now let's go to the Nasdaq right now, because the Nasdaq, you'll notice the Nasdaq is just a little bit premature, right? You can see now, but look at the Nasdaq, right? So the Nasdaq is definitely bearish still. Very strong move down, but trading down again at the lows of last week's range. This move lower looks pretty scary. It does. right? And of course, you open up any newspaper right now, and the headlines will read, right, tech slaughter, Facebook crumbling, right? Just today we heard about Apple, right, choosing to use, they're developing their own chips instead of using Intel chips. There's a lot of stocks right now, Nasdaq stocks, right, that are kind of being tested as far as what people really think is going to happen on this. So this big move lower may continue for tomorrow. We're not seeing anything close to what we saw on the S&P. Again, move looks scary, but looking at it in context, we're right down below that last week's range, right? Again, pendulum swinging, right? Pendulum swings up, pendulum swings down, right? And we're right about that pendulum swing right now, right? This will be interesting to see what happens here in the short term. My plan now is to wait for that second try and wait for that signal of strength, right? So remember, here we are. There's the lower low, right? There's the lowest price. Now, the first step is we need to see the market. We need to see the bears, excuse me, who control the market. Got to see them lose momentum first. So how does that happen? 2 tries, right? 1 try. Okay, looking for 1 more try here. We got to see those sellers try 1 more time to go lower. That will tell us the bears are losing their grip. The second thing we need is to see some momentum going higher. That will then take us higher here, and that will be your first leg up, right, for that strength, and then pull back, and then strength. So really what I want to see right now is I want to see us go 1 more attempt to go lower. I don't think that was enough right there. 1 more attempt to go lower. Show me some strength. And then that should be enough for us. Start looking at this new channel. I've kind of drawn it up how I see it, but we'll have to wait and see what we get tomorrow, right? And then look for that pullback, right? And that go from there, right? That will be our green light for tomorrow. The key is going to be get that real strong move higher here. And remember, just like we said on the S&P, don't try to sell into these levels of resistance, because again, if I was a seller, that's exactly where I'd be looking to sell, right, to get back down to retest that low. We already have this rising support, so that's going to be a definite roadblock for those bears. But again, don't underestimate the power of these headlines we're seeing about all these little changes happening, right, in Silicon Valley. And we already know that only a few select symbols, only a few companies are actually the ones that move this Nasdaq market, right? So don't be fooled by this diversification indexing of all the tech stocks, right? The FANG stocks, right? The Facebooks, the Apples, the Amazons, the Netflix, the Googles, right? Those are the only ones that really matter in the Nasdaq, at least in today's marketplace. So if we see more headlines of that tomorrow morning, right, this could continue to get dragged lower. S&P is a great example of a market that is showing clear proof of that turn. Will the Nasdaq follow suit? You've got 4 steps now, right, to make sure you know how to trade it here for tomorrow. How about some gold here? How about some gold? The yellow metal is bullish with a strong move higher today, running all the way up to reach that measured move. The measured move is great because it's considered major resistance, so I need to wait for buying opportunities, either using a 2-legged pullback down to that battle zone support, or wait for a breakout pullback and finish off that strong bull target up around that 1352.4. This is a pretty easy chart. Probably the easiest one of the day today. Draw that trend line up off those lows, right? This becomes a beautiful example of a channel with gorgeous channel rotation, right? And that channel tells me to buy off the low of the channel. The channel also tells me to look for a 2-legged pullback and a retest of that high, which between you and me and the rest of YouTube, right, is what I'm looking for tomorrow. Because the second clue here is a measured move. We start at the first pullback of today's session. It pulls back to test the moving average like most measured moves do, and it goes up to a symmetrical 2-legged move. Now, if that keeps going, we could look for a triple measured move, right? So if that does keep going here, you can measure this sucker out, right? 1, 2, right? So if we do keep going, we now know exactly where that next big target will be up at that triple measured move. Okay, just be aware of that if this is all we get for the pullback. Okay, so that'll be play here in a moment. The big deal right now is this measured move, is resistance, right? This is resistance. And in most situations, once we get to a measured move, we typically see a situation like this. We see the first pullback fail down below the moving average, right? This, of course, gets the bears all in a tizzy, right? The bears start thinking, we're reversing, sell it, right? But you don't want to sell low, right? So bears, they try to sell high, right? Obviously, it's not a bear market yet, so bears are not on the right side of the market. If they struggle and fail, that will lead to buyers jumping in on the failure. That failure will send price higher, giving buyers more confidence. Don't buy high, though. Buy low on the pullback back to the moving average. So again, kind of the moral of the story is anytime we get to a measured move, okay, I'm expecting to see a two-legged pullback, a failure into strength, strength into a pullback, and a pullback back up to retest that high, right? So failure at the moving average, pullback to the moving average. Again, that pullback is historically more reliable than the failure just because you're getting more evidence, right, that those bears have already failed, and you get a nice strong move back above that moving average. It's just an easy rule of thumb. You know, you want to be more successful. One of the easiest rules we use every day in our trade room is to buy above the moving average, right? Don't buy below the moving average. That's an easy way to increase your odds of success. So that's why that second pattern is generally speaking more reliable than that first one, right? But the first one allows you to really harness the power of those stops getting run to jump in early and hold the runner back up to retest that high. So that's ultimately what we see most often on measured moves. Now, another option which we saw earlier on today is to see this as what we call a breakout pullback. And that is get the moving average up above that, right? Get it above that measured move, and then use that measured move as a level of support. So what was resistance can easily become a reversal line, right? Can easily become a level of support, right? And we could buy off that 1348. Most important thing though is usually when we see a breakout pullback like this, it's usually two legs, right? It's usually two legs. So be very careful, right, if we see it go straight down like that. That will usually pull back one more time, and then of course you're back below that resistance. So now you've got to go back down and buy low again, right? Below that low again, right? So just be careful buying into that, right, into that measured move. Again, you want to see it go up, get the moving average up, strong move up, two-legged pullback, right? And off the races we go from there. Two-legged pullback, moving average above that measured move. And then this is where things kind of get exciting for tomorrow, because as we get up into that bull target now, right? Let's say, for example, we really run higher here, right? Now we're holding inside of that channel, right? So if we keep, if we don't get a deep pullback here, eventually we're going to start getting that deep pullback, and we might get that tomorrow late morning, right, into tomorrow afternoon, and that might be a beautiful setup tomorrow for a nice big juicy target going back up, right, to retest that high. So that's definitely a possibility on gold. Again, most buyers right now are probably thinking, just give me a nice two-legged pullback. Give me something well below that moving average. Let's get those bears to try to take the bait, failure pullback. Whether this sequence happens here or whether it happens here, right, I think everybody's waiting for that right now. Now, last but not least, how do we turn bearish? Strength to the downside, right? Strength. That strength should not catch you off guard because, again, it's a measured move, so we should expect some profit taking here. But, of course, that strength, right, then into a pullback, right? That pullback, of course, back to the moving average, and then strong move down, right? It's not enough to get a strong move down. You've got to hold the pullback and then another leg lower, because if those bears can't hold this, we're going right back up, right, to retest that high. So at that point now, I'm going to go lower low, connect the dots, and then to the sell right up around that high for that move going all the way back down to last week's low, right, that 25.4, right, from last Friday. Gold was, as pathetic as it was, gold was open, right, last Friday because of the NYMEX. So that's the plan there for price going up and price going down. Also don't forget, if we do come in and we double top that high, remember, anytime we see a double top in a bull market, just like a double bottom in a bear market, if we do see a double top at the bear market, if we do pull back, retest, but can't keep going, right, it becomes a range, one try, two try, right, and buy that sucker going back up, right, into that range here for tomorrow, right? So that's the plan on gold. Will it reverse? Don't even think about trying to predict reversal right now. Wait for that proof before you go trying to sell this market here for tomorrow. And then how about a megaphone pattern? How about some bow tie? How about some inverted triangle? Yeah, potato, potato, whatever you want to call it. Euro is range bound with a megaphone pattern. It's an expanding triangle, right? Lower lows and lower highs. That tells me this market is balanced, sideways, right? Range bound. And a balanced market tells me there's no real overall direction here. Yeah, I mean, you definitely could say the market has a little bit of bearishness to it, right? Left over from last week, that move lower here. But at this point, right, we've already gone through last Thursday, right? We've gone through, right, today's session. So I don't think we have too much of a bias to this just yet. So buyers will buy the lows, sellers will sell the high, and of course we all want to avoid that middle, right? So that's kind of the number one thing right now. And again, this all comes from double bottom at that low, right? Once you see that bottom hold at that low, then you know you're selling back up at the high. It's that simple, right? So of course this was coming in from last week, right? That's last Thursday's trading range, right? We go down below the low, fake out, breakout low, fake out, breakout high. You could definitely say pendulum swing on this as well. Pendulum swing down, right? Balance in the middle, pendulum swing, pendulum swing. So we're looking peachy keen here as far as a range bound market. A very strong move down here, so I will be looking for a second attempt to go lower and then back up into that range, right? The key is the 2-try rule and stay the heck out of the middle. I want to buy the low using seller failures. I want to sell the high using buyer failures, right? So as we go lower, 1 try, 2 try, and again, this may not make it all the way to new lower low here, right? But good example, 1 try, 2 try, back up in. I want to see 1 try, 2 try, right? Failure back up into that range. If it does go lower, right? Don't be so quick to call this a bear market. 2-try rule oftentimes goes to a new lower low. In that case, failure and then back up into that range. That would honestly be the better scenario if we saw the market make another lower low, but then of course the moving average, right, comes over. Bears try to sell it, they fail, strength pullback and back up into that range. You can see it's the same basic entry patterns. It's just using those entry patterns in different ways. It's a lot like being a chef, right? Or cooking baking a birthday cake. Once you know the ingredients you need to use, based on whatever type of dish you want to make, you use the ingredients in different combinations, right, in different ways. In this case, we want to use the ingredients to buy down around that low. In this case, if we do make our run back up into that range, 1 try, 2 try, and back down into that range, right? So 1 try, failure, 2 try, and then back down in. So buying low, selling high, and again, avoiding that middle, right? The middle of that range is off limits, because what happens is you've got sellers selling off the highs, you've got buyers buying off the low, right? And of course, right in the middle is kind of where that vacuum occurs, where you don't have many buyers coming in, there's not many sellers coming in, and the market kind of has a difficult time, right, getting through that area. So make sure you avoid that middle, buy those lows, sell those highs, and by all means here, guys, don't forget, I'll be trading this strategy, executing the same strategy tomorrow in our trade room. We open up at 8 o'clock Eastern time. If you love my nightly newsletter, you're going to absolutely love being a client and joining me every day in the trade room. And the best part is, you can join our free trial and learn all about the trading strategy. I'll shoot you an invite to come out and join my trade room as a guest. It's all there on the homepage at schooloftrade.com. If you're on our YouTube channel right now, I'll put links in the description of that YouTube video. So make sure you grab that free trial and come out and join me tomorrow as a guest in the trade room. And don't forget, we've got 3 levels of membership: beginner, intermediate, and advanced. You can start as a beginner. It'll credit towards your intermediate, credit towards your advanced. Or don't forget, we always have flexible payment options available for our advanced membership classes. That way you can take the plunge, jump in, right, and start learning with me every day in our trade room. Guys, my name is Joseph. Hope you guys had a great week here. I had a fantastic weekend. I hope you guys did as well. We're back for the big week tomorrow morning, 8 o'clock Eastern time. If I don't see you there tomorrow morning, we'll see you same time, same place tomorrow evening on our next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.